Okay. So as I mentioned, your short quiz for the statement of cash flows will be due on November 12, 2021 at 8 a.m. Then you have to watch the video first and then use the Excel template, this one, and save it family name, first name, ID number, dash cash flow short quiz. So your feedback, based on your feedback, you're not able to, could you kindly check, guys? You're not able to download this?
Ano po, sir, kasi it's in an unpublished, it's unpublished pa, so we can't see the
Okay.
template and
How about the video? No problem with the video?
the video also we can see because it's unpublished.
Okay. All right. So my mistake, sorry. So let me just, let me add that to our modules. Okay. I thought that the assignment folder is separate from the worksheet. Okay, let me go to the file, create file. Okay, the cash flow statement template there. Okay. Here. Thank you for pointing this out. Okay, so this one, guys, you can now access the cash flow statement, and let me also, okay. Okay, this. All right, so let me find first the, this is not the one. Statement of cash flows. Okay, this one. Okay, so I place in our modules the cash flow statement and the Excel file. Okay, so that should solve the problem. Okay, or I could have just adjusted the access. But anyway, since I already posted the cash flow statement and the template, you can now access the video and the also the cash flow statement. Okay, thank you so much for pointing that out. All right, so this is due on Friday, Friday 8 a.m. Okay, so I think you have ample time. This is just a 45-minute video, and it's easy to follow along because it's a step-by-step process. Okay, now we were using a file we were using this financial statements, the FSCF ROIC. This was the file that we were using last time. Let me open that. Okay, so we finished the first worksheet. Now I will leave you guys to work on the other worksheets, but we're going to still discuss them and compare notes. But today we're going to start working on worksheet number 4. Okay, but this worksheet number 4, what I did was to recreate this and post this. So this now, guys, common size ratio analysis DuPont. So this is just the worksheet number 5, I think. Worksheet number 5 of the original here. Worksheet number 4 of the original file that I gave you. I did some changes. So let's open the new worksheet that I sent you, the new workbook. Okay, were you able to open it, guys? I have your feedback, please. Were you able to open it?
Yes, sir.
Okay. So kindly, guys, I think I already changed the dates here. Kindly just delete the first one. Okay, so let's just delete this one because this has not been modified yet. I'll delete that. Okay, and then this one I'll rename. Okay, FS and ratios. Okay, and then what I want to do is I'm going to copy this, create another copy. Okay. So please create another copy so that you have a copy of the original one, the unanswered one. Because if you want to practice, suppose you'd like to practice on what we did, on what we do today, on what we're going to do today. Okay, so you still have the original copy. All right. So let's start working on this. We now go to financial statements and ratio analysis. Okay. So there are several lines here. We start with the preparation of the common size statement. You notice that this is a different company. I'm sorry, I forgot. Let's just write here XYZ company. Okay. So do you know how to prepare the common size statement? Could you kindly chat, please, if yes or no? Do you know how to prepare? Have you studied that before? Let me just type this one so that I know where your reply after this line. Okay. Do you know how to construct the common size statement? Just a yes or no, guys. Okay, good. Thank you. Thank you for the feedback, guys. Okay. Now, when you see this, you notice that when you prepare financial statements and when you present them, always start with the most recent one. So this is 2021, 2020, and 2019. Okay, so let's start doing the common size statement. The common size statement allows us to present your data, your financial statements details in percentage form. Okay, so you're presenting this in percentage form, and you are basing it or comparing it to a specific account. So for example, for the income statement, we would like to know these accounts in percentage form relative to the sales. So everything is expressed in terms of sales. What do I mean by that? So for example, cost of goods sold divided by sales, other expenses divided by sales, depreciation divided by sales, everything divided by sales. Okay, so of course, guys, your first line will all be 100%, and the rest will be expressed as a percentage of sales. Okay, so that's what we mean by the common size statement. Okay, so could you guys, any suggestion on what formula I should indicate here so that the formula I can copy? Okay, just one formula, just one formula here, and I can copy it to the right and down and down and down. So just one formula. Any suggestions, guys? What formula should I write here so that it will reflect the common size statement for 2021, for 2020, and for 2019? Be equal to? Any suggestion, guys? What should be our formula here? So everything has to be divided by sales. Okay, so for 2021, it's everything divided by 703,500, the sales of 2021. Of course, when we go to 2020, everything should be divided by sales of 5,834, and the same for 2019. So how do we create a formula here so that we just create one formula and copy it to the right and down? Okay, so we have an answer here. Okay, so again, EQ. Okay, EQ kindly. So EQ is requesting for me to explain again. Okay, so the common size statement. Okay, it's a presentation of your income statement and balance sheet, but not in absolute terms, because here we have values, right? The common size statement presents your income statement and your balance sheet in percentage, in percentages, and the percentages is based on the sales. So, for example, for 2021, the common size statement for 2021, the reason why it's called common size is because you are comparing everything with one specific account, and that's your sales. So for example, cost of goods sold divided by sales, other expenses divided by sales, interest expense divided by sales, everything divided by sales. Okay, so that's why it's also called percentage of sales. So for 2021, how will our formula look like? So it will be, the first one will be sales divided by sales, right? When we copy this down, it has to be, and it will now become cost of goods sold divided by sales, etc. Okay, let me see at the chat here. Okay, Patrick, thank you so much. Could you explain why that's your suggested formula? So Patrick is suggesting that it's $4. Why is this your formula, Patrick?
So that the second value will continue to be the same.
Okay. What does the $4 mean there? C dollar
It-
four.
won't change.
Okay, it fixes, okay? It fixes your row 4, right? Tama, Patrick?
Yes, sir.
Yeah. Okay, so let me illustrate how that is done. So C4 divided by C4. And then what you can do is, what am I pressing, guys? You notice that the references of the cell C4 changes, right? First, it's $C$4, then $C$4, then $C4, then C4. Okay, it keeps on changing. Do you know what I'm pressing? What key am I pressing in my keyboard? Anyone? Okay, thank you. Thank you, John, and thank you, Cullen. No? So you're correct. I'm pressing the F4 tab. Could you kindly practice on that, guys? Okay. In Mac, is it also F4? I'm not sure in Mac. Is it function F4 or command F4? Anyone using Mac? Okay, let me see. F4 also. Thank you, Joanna. Okay, thank you so much. F4 also. Okay, now let's see what this means. Okay, first let me illustrate, guys. Okay, let me repeat the process. Is equal to C4 over C4. Okay, now if I highlight everything, and press C4, notice that both of them changes. Okay, everything, the numerator and denominator changes. Okay, but if I don't highlight everything and just let my cursor be there at the end of the expression, and then if I press F4, then only the denominator changes. Okay, so what does this mean? This $C$4. The introduction of the dollar. Okay, so let me use a pen. By introducing the dollar before the, okay, yeah. So here you have C4, okay, and then $4, and then $C4, and then $C$4. Okay, the introduction of the dollar sign before the either the row or the column has an effect of fixing whatever follows a dollar sign. So in this case, guys, $4 fixes your row 4, which means that if you copy the formula anywhere to the left or to the right or down, that means your row 4 will not be changing. It will be just fixed at row 4. On the other hand, $C4 indicates that you want your column to be fixed. So if you copy the formula anywhere, the column position will not change. On the other hand, $C$4, okay, means that both the column and the row is fixed. Okay, so let's illustrate that so that it's clear to us. Okay, so here it's equal to C4 divided by this one. I'm sorry, C4 also. Okay, so let's try to, if I fix this, guys, C4, $C$4, okay, and then if I copy the answer, okay, what happened? What happened, class? You notice if I go here to H4, it's D4, okay, here, it's D4 over C4. So the $C$4 fixes this cell, C4, it fixes it. So that if I copy the formula anywhere, your denominator remains at $C$4. And that's not what we want. Because here you're saying, you're comparing the EBT of 2019 to sales of 2021. Okay, I don't want that. What I want is compare the earnings before tax of 2019 to the sales of 2019. Okay, common size statement is supposed to be for on a yearly basis. Okay, so this one will not work, guys. The $C$4 will not work. So let me change this. Okay, let's first see $C4. What happens if this is the formula that we're going to use? What will happen is that it will fix column C. Okay, so that if I go anywhere, guys, your column C will not change. So enter, and then I copy this one, and then down. Okay, notice what happened. Okay, if I go anywhere here, okay, it became D7 divided by $C7. Okay, which means that your column position did not change. Anywhere you go here, it's still column C there, column C here, column C, because you fix column C. Okay, if you check and you go to any of the cells here, it is still column C, because that's what we indicated here. We indicated $C. So if we copy this formula to the right, to the left, down, $C, which means you're fixing it at column C, will not change. Okay, so this is wrong. This is wrong because what happened here is that it's now D8 total operating cost of 2020 divided by total operating cost of 2021. We don't want that. What we want is everything is divided by the sales of 2021, sales of 2020, and sales of 2019. That's what we want. So what we do here is that F4, F4, F4. This, as Patrick mentioned a while ago, this is the correct answer. Okay, what will happen here? Here we're fixing the row 4. So anywhere we go here, anywhere we copy the formula, it will not leave row 4. If we copy it to the right, it will just go to the next column, but still row 4. The values that we want fixed are on row 4. Okay, so Control Enter. Maybe let's just let's fix this to 2 decimal places, or maybe 3 decimal places, and then copy to the right, and then copy down. All right, there you go. That's now our correct common size statement. Let's check. So this is C5 divided by $4. So we're dividing our cost of goods sold by sales. Let's go. Let me go to the others. This is EBIT of 2020 divided by the sales of 2020, which is correct. Okay, this one. So this is net income of 2019 divided by net income of 2019. There, E13 over E$4. So this is the correct way to construct your common size statement. So in Excel, it's really very easy, as long as you know, okay, how to make use of this is what we call absolute references and relative cell references. Okay, the one with the dollar signs are called your absolute cell references. The one without are your relative cell references. Okay. So this is our common size statement for 2021, 2020, and 2019. Okay, and let's just follow the format. Okay, so here we have 2 underlines, so that it still looks like a top and bottom. Okay, it still looks like a common size an income statement, although not expressed in absolute terms, but rather in percentage terms. Okay, for this one. And this one. Okay, so we have completed our common size statement for 2021, 2019. Okay, let me also put an underline here.
Sir,
Yes.
how did you do the shortcut again?
Okay, sige. Thank you for asking. Okay, okay, so let me repeat the process. Okay, so it's equal to, we want all our accounts, whether it's cost of goods sold, EBIT, etc., to be divided by the sales of that specific year. Okay, so in other words, net income of 2021 should be divided by the sales of 2021. EBIT of 2020 should be divided by the sales of 2020. So everything here should be divided by their corresponding sales account of their specific year. So let's start with the formula. This one, sales of 2021. I want to divide that by the sales of 2021. Okay. Now, what should we do in order to make sure that everything is divided by sales of 2021, sales of 2020, and sales of 2019? The positions of sales 2021, 2020, and 2019 are all in row 4. Okay, here in row 4. So what we're going to do is by pressing F4, okay, so this is incorrect because if we do this, it will just be fixed at $C $4. Everything will be divided by sales of 2021. We don't want that. Okay, this one is the correct one because we only want to fix row 4. We don't want to fix column because we want the columns to move. We want the column to move to column D, column F. Okay, so this is the formula for our formula to construct your common size statement for 2021, 2020, and 2019. Okay, and then I press Control Enter there, and then copy the formula to the left, to the right, and then down. Okay. Okay, did that answer your question?
Thank you po, sir.
Okay, good, good. Any other questions, guys? Any other questions? Please feel free, guys, to ask your questions. I appreciate you asking questions. Okay, and what I did here was just to copy the format. Okay, I placed an underline also here in sales, just to just to distinguish it from our costs. Okay. Right. So far, guys, clear ba? Clear ba tayo? Paki-chat naman, please. So far, clear tayo. Okay, thank you, Jeff. Okay, Joanna, Melvin, salamat. Okay, the rest, guys, Robert, Iana, okay, Julian, John, thank you. Okay, Beyonce, Patrick, good. Good. Okay, Joaquin, salamat. Kirsten. Okay, thank you, guys, for your responses. I really appreciate that. Although I would hope next time, sana again, guys, sana lahat nagre-respond. Okay, now let's take a look quickly at what this indicates. Okay, this gives us some meaning to the financial to the income statement. For example, cost of goods sold 82.82. That's 82%. So what does that indicate? For every 1 peso of sales in 2021, the cost of goods sold accounted for 82 centavos. Okay, so for every 1 peso sales, 82 centavos of that is cost of goods sold. Okay, 8.7 centavos is other expenses. Depreciation is 1.7. Okay, therefore the profit margin is 92 centavos or 93 centavos approximately. So what does this indicate? For every 1 peso of sales, 93 centavos goes to the cost of producing or selling the product. Okay, and the bottom line, guys, is that for every 1 peso of sales, okay, 3.6 centavos is the profit. Okay, that's what remains. Okay, so that's what this common size statement means. So this is useful because everything now is pegged to sales. Okay, we can now see, we can now picture how much cost are we, let's say, cost of goods. Okay, how much cost of goods are we generating for every 1 peso of value that we're selling? Okay, and how much are we actually earning? Okay, so we don't only look at this intra-year. When I say intra-year, on the same year. Okay, we also look at it inter-year. In other words, we compare it with the previous years. Okay, so we compare it with the previous years. For example, in 2019, our profit margin, okay, was 2.6 centavos for every peso of sales. It went down to 1.6 centavos in 2020. In fact, in 2020, this was a very bad year for the company because they were losing. No? for every 1 peso of sales, they were losing 1.6 centavos. Okay, or for every 100 pesos of sales, they were losing 1.6 pesos of sales. However, they were able to bounce back in 2021. Okay, they were able to generate a profit of 3.6 centavos for every 1 peso of sales. Okay, so the common size statement tells a good story about how the company is performing. And of course, as we mentioned before, we don't only look at the common size statement of the company. We have to benchmark it. Here we're benchmarking against time, and then we have to benchmark it against their direct competitor. So you have to look also at the common size statement of their direct competitor and compare how does the company fare relative to their direct competitor. Usually, when you compare with the direct competitor, you benchmark up. Okay, you benchmark up. It makes no sense for Jollibee to compare its performance with Burger Machine, or sorry, with Burger Machine. Okay, the stores that you find there spread across the country. So they're not really direct competitors. Okay, Burger Machine has a different business model compared to Jollibee. So of course, when you benchmark the performance of a company, you benchmark it against not just any company, you benchmark it against a direct competitor, and preferably a direct competitor that's performing, that's known to be performing more than you as a company. Okay, because you learn more by benchmarking your performance against the quote unquote better performing firms. Okay, rather than just comparing yourself with, let's say, if you're the second in the industry and then you compare yourself with the 20th in the industry, and you'll just the company will just be tempted to pat themselves on the back. Yeah, we're really performing well compared to company number 20. But does that make sense? Okay, does that make sense to benchmark down? Okay, you usually benchmark up. If you're number one, then it would be good to benchmark against performers from other countries. Okay, so that's usually the norm. Okay, so you don't only benchmark against time, you also benchmark against the direct competitors. Now, in fact, are you familiar with the Sparklines, guys? Can you kindly share? Can you kindly chat in the chat box? If you're familiar with, let me write that. Sparklines. Okay, no, thank you. Thank you. All right, so, okay, thank you. In Excel, you have Sparklines. The only thing here is that, okay, let's see, because you might have a problem with Sparklines when your data is from the latest to the earliest. Okay, because when we present financial statements, we have to show the most current one, in this case 2021, and then 2020, and then 2019, not the other way around. Okay, we don't do it 2019 and then 2020 and then 2021. Now in Excel you have Sparklines, so let me just go here to cost of goods sold, and then okay, let's introduce a Sparkline here. You can actually do the Sparkline for everything here. Okay, in fact, including the sales. Okay, so let's highlight this and then insert. Okay, you see here, guys, Sparklines. Okay, so insert Sparklines. Let's just choose the lines first. There. Okay, the data range, guys. What's your data range? The data range is, we're plotting this one, right? Okay, we're plotting this one. Okay, location range is from J4 up to J13, and press OK there. So this is a Sparkline. This is the movement of our figures. Okay. In fact, you can use this for your Sparkline, it will give the same. Okay, because this is just percentage. So why don't we do that? No, it will not give the. Sorry, it will not give the same. Okay, so let's also create Sparklines for your absolute figures. So insert. Maybe it would be good to do this. Let's use the column. Okay, there. Okay. Okay, so here we have the Sparklines using the absolute figures. And this one, you have the Sparklines using the, the percentage. The percentage. Okay, so what does this tell us? For example, this one, it tells us that sales has been increasing. So you notice, guys, take note of how you interpret this. This is 2021, this is 2020, and this is 2019. So in terms of sales, okay, it has been increasing over time, and then also cost of goods sold. Other expenses, you can see here that there was a big increase in 2020, and then it went down to 2019. So we can see here that other expenses, in terms of absolute terms, it was a big amount in 2020, and then it went down to in 2019. Okay, so EBIT, guys, EBIT. So you can see here that EBIT, it went down. Earnings, our operating profit went down in 2020, and then went up again to 2020 in 2021. Okay. So same thing here, guys. Same thing here using the percentage. Let's take a look at EBIT. Notice that in terms of the common size statement, EBIT really went down. Your operating profit went down. Comparing 2019 and 2020, your common size statement for EBIT was way below, less than in 2019, and then it jumped again to in 2021. Okay, let me pause for a while, guys, before I continue discussing this. Any questions so far? Any questions as far as your Sparklines is concerned? It's a graphical display of the movement of your data. Clear so far, guys? Okay, thank you. Thank you. So this is just a graphical way to present the movement of your data. This is actually good, especially if you're working with let's see, a long time series. Okay, here we have only 3, but you can still see the difference. Okay, of course you can change this. You can change the format, design, for example, design. Then I'll use the maybe, what if we, no, not good, the column. If I use the column, and then maybe I'll show the negative points there. Okay, you can do some editing here. If it was a line, okay, or a column, okay, whatever suits you guys. Okay, here, what I did was to, okay, so I converted it into a column and then show the negative points. Okay, maybe you can include the high point and the low point. It's not clear anymore here. Okay, so maybe this will do well first. Okay, so let's take a look at this, guys, in relation to your common size statement. Okay, notice, guys, that for our EBIT, okay, our EBIT in 2020, we were just earning 0.3 centavos for every 1 peso of sales. It increased again in 2021 to 7 centavos per peso of sales. Now, what could be the reason why there was a big drop in 2020? In fact, in 2020, it was a loss. The company was losing losing money for every 1 peso of sales. Okay, and the reason for that is if you take a look at the cost components, okay, cost of goods sold, it was higher in 2020 compared to 2021. Also, the other expenses, depreciation also. So the operating cost in 2020 was practically 1 peso for every 1 peso of sales. 99 centavos, 99.7 centavos of operating cost for every 1 peso of sales. Okay, and then we still have financing cost. So when we subtracted the financing cost, wala na. All your profit was already eaten by your financing costs, so that your earnings before tax was just negative, no? Negative na yung earnings before tax natin. So that was the story of the, let's quote unquote, poor performance in 2020 relative to 2021. Okay, kasi sa 2020, in 2021, guys, the cost of goods sold was only 82 centavos. In 2020, it was 84, 85. And then the profit margin in 2021 was 93 centavos. Sorry, the operating cost in 2021 was 92.9 centavos, while in 2020 it was 99.7 centavos, practically equal to the sales. Okay, so we see here a deterioration in the performance of 2020 compared to 2019 and 2021. Okay, and that can be seen, guys, here. Okay, for EBT, guys, it was a drop in terms of EBT. Okay. Interest expense also went up, okay, in 2021 and 2020. Okay, and then EBIT. Sorry, the red here, guys, are negatives. Negative. EBIT, guys, if you can see here, it went down in 2020. 2019, it was this level. 2020, it really went down and then went up again in 2021. Okay, so any questions, guys, so far? Any questions with? Any questions? Okay, let me see. Okay, thank you. Thank you, Patrick. Thank you, Iana. Okay, good, good. Thank you, Joanna. Okay, thank you, guys. Thank you. So far, I hope it's clear. Should you have any questions, guys, please feel free to, feel free to just raise your hand or chat in the chat box, then we will address your questions. Okay, so we now know how to construct the common size statement. Now, another name for this is this is also called your vertical analysis. So vertical analysis. Vertical because everything is pegged to your sales account, okay? So it's like a vertical comparison. Okay, for 2021, 2020, and 2019. Now we also have what we call horizontal analysis, where we compare between years. Okay, so we're looking at the growth rate between two consecutive years. So let's do the horizontal analysis between 2021 and 2020, and also 2020 and 2019. Okay, so there will only be two analysis for your horizontal analysis because there are only 2 periods. We have 3 years, but we have 2 periods. Okay, so for 2021 and 2020, so this will be equal to the current value divided by the previous value minus 1. Okay, oops, sorry. What's happening to my mouse? So this is equal to the current value divided by the previous value. So we're looking at the growth rate, -1, Control Enter. Okay, so let's just make it into 3 decimal places. Or if you want, you can make this into percentage. Okay, you can do that also. Maybe just 1 decimal place and just copy this. Okay, and then once again, let's put the top and bottom border. Okay, so that's your horizontal analysis. Okay. So what does this tell us? 20.6%. What does that mean? It means that sales increased by 20.6% from 2020 to 2021. If we're comparing these two periods, sales increased by 20.6% from 2020 to 2021. And sales increased by 70% between 2019 and 2020. Okay. Okay, nothing wrong with that. Seems that sales was increasing, although between 2020 and 2021, sales went up just by 20% compared to 70% the previous period. Now, here's what's telling. Okay. Between 2019 and 2020, cost of goods sold increased by 73.9%. Okay, so we have a problem with that because sales increased only by 70% and then cost of goods sold increased by 73.9%. There was a huge increase in cost of goods sold. Okay, unlike in 2021 to 2020, sales increased by 20%, but cost of goods sold increased only by 16.5%. Okay, so the increase in sales was greater than the increase in your cost of goods sold, comparing 2020 and 2021. Okay, dito sa 2019 to 2020, dito tayo may problema. Yeah. Okay, and in fact, in other expenses, okay, there was an increase of nag-double, no? More than double in our other expenses between 2019 and 2020. If you can see here the absolute figure, 18,900, it became, I'm sorry, 340, it became 720. Okay, 340,000. If you double this, this is 680. So it more than doubled in 2020. So there was a huge increase. And in fact, guys, in 2020 to 2019, okay, there was a decrease in other expenses. Okay, from 720, it became 612,960. So from the part of management, guys, these are very important figures. Okay, it begs the question, what happened in 2020? Why the sudden surge in your other expenses? Was it due to, let's say, was it due to wastages in the finished product? Were there products that became wastage in the sense that you cannot sell them anymore? Okay, were there wastages in raw materials? Okay, so very important factors to consider. If you're finance, if you're operating, then this has to be really considered. Okay, depreciation went up by 518%. That's okay, guys, because depreciation is linked to investment in property, plant, and equipment. Most probably, the company. Let's try to see the fixed assets. Yeah, there was a big increase in net fixed assets from 344 up to 939, 790. So this is understandable if depreciation increased. Okay, and in 2021, there was a slight increase in depreciation. But this is telling, guys, this one, the total operating cost went up by 80.5% between 2019 and 2020. Okay, again, comparing that with sales only increased by 70%, and total operating costs increased by 80.5% for that period. While in the next period, there was an increase in operating costs, but sales increased by 20.6. So 2020 really seems to be a very problematic year. Okay. All right. Then your EBIT, okay, you can see here the operating profit, guys, it really went down. Went down by 91.7%. So here's what's telling. Because of course, in the increase of your top operating cost. So your EBIT diminished greatly in 2020 by 91%. However, in 2021, there was a marked increase. Okay, that's 2.7 times increase in 2021 relative to 2020. Okay, all right. So this one, guys, this one, we will discuss this next meeting because I want you to see a possible problem, especially with this one. Okay. This one, 366.5 and 208.2. Okay. What's the problem with this one, guys? Okay. Take note, guys, that our EBT was negative 158,560 in 2020. Okay. And then, wait, not this. I'm sorry. Sorry for. Okay. This is our problem, guys. Okay. The problem in horizontal analysis, guys, is when the previous year's value is negative. Okay, so it was negative 158,560 in 2020, and then your earnings before tax ballooned to positive 422,640. And then we're told here that negative yung ano natin, yung rate, no? Yung growth rate, which is wrong. Positive dapat yan, no? Positive dapat yan kasi from negative nga naging positive. And this is because of the formula. So kailangan, guys, ma-adjust natin yung formula to reflect the correct growth rate. Okay? No problem with the figures that are positive here. No problem, guys. Your horizontal analysis will create a problem when you have negative figures, okay? Whether in the previous or in the current. Okay, so we'll try to address this next meeting. I want you to look at this first, okay? Because at face value, guys, 366.5 negative means that there was a 3.7 times decrease. Okay, I'm sorry about what I mentioned here. It's not 2.78, it's 27.8 times. Okay, because I'm just moving it to decimal places. So this should be 27.8 times increase in your EBIT. Okay, this one. I think I remember saying that EBIT increased by 2.78. That's wrong. It's 27.82 times EBIT increased from 2020 to 2021. Okay, now this one, guys, it's 3.66 decrease when in fact your EBT increased, your taxes increased, your net income increased, and it's churning out this negative 366, and it's a value. It's the current divided by the previous, and the previous is negative, then -1. Now I want you now to consider how should we correct this, because this is the wrong figure. Okay, all right. So let's move on first to the common size statement in your balance sheet. Okay, I'll give you guys 1 minute to create one formula here, copy it to the right and to the left. Also here, copy it to the right and to the left, and then fix your format for your common size statement for your assets and liabilities for equity. For the assets and liabilities and equity, we compare it with the total assets or the total liabilities and equity. All right. So I'll give you 1 minute, guys, to to perform the common size statement for your assets and liabilities for your balance sheet. Okay. Please do that now. Okay, guys, are you done? Okay, so I hope you were able to do the common size statement. So let's compare, guys. Let's compare the common size statement. So for the balance sheet, everything has to be divided by the total assets. So my formula here was the cash divided by your total assets. And then similarly, I'm fixing row 24. Okay, I fixed row 24 so that everything will be divided by the total assets of 2021, 2020, and 2019. Okay. And also for the liabilities and equity, I divided everything by total liabilities and equity, or you could have used total assets. No problem. They're the same. Okay. May I have some confirmation from you guys if you were able to construct your common size statement for your balance sheet and income statement? Okay, good. Thank you. Okay, salamat guys, ha? Thank you. Good. Okay, so there's a... Okay, sige. There's a request here for me to repeat. Okay, so for the common size statement for your balance sheet, everything is compared with your total assets or total liabilities and equity. So my formula here is, let me delete this. Okay, it should be equal to my balance sheet account divided by the total assets. Okay, and then I'm going to fix $24 so that when I copy the formula elsewhere, it will always stay with my total assets. Okay, so this is our formula for the common size statement for the balance sheet for 2021. And if we copy that to the right and to the left, then it will just stay, the denominator will just stay in row 24. Okay, so it will go from 2021 total assets to 2020 to 2019, depending on how you copy the formula. Okay, so copy this to the left or copy this down, copy to the right, no problem. Okay. All right, sige, yung pati horizontal. Okay, then for liabilities naman, I'll just show you this to you. Okay, so it's also accounts payable divided by total liabilities and equity, or you can use this, total assets. Okay, anyway, it's the same. It's the same. Okay. And then for the common size statement, okay, the formula is simply the current value. The current here is 2021. Okay, if you're comparing the periods 2020 to 2021, the current should be 2021. The latest one divided by the previous minus 1. And then you can copy this to the right. Okay, copy this down. Same thing for the liabilities and equity. Okay, clear so far, guys? Any questions? Okay. All right. Thank you, Kirsten. Thank you, Tyrone. Okay. All right. Again, guys, I appreciate you asking questions like this. Okay. All right. So very quickly, guys, let's see what the common size statement tells us. So you notice, guys, that in the current assets, the company is really heavily invested in its receivables and inventories. Okay. All right. And we can, of course, we can once again insert here. If you want to insert Sparklines. Then maybe we can highlight some negative points there. Not negative. Okay. So here we can see, guys, that what can we deduce from this? Short-term investment went down in 2020 and then went up again. Okay. Fixed assets, guys. Okay, you can see here that fixed assets went up in 2020 and then went down again in 2021. You can see the absolute figures here: 344, 939, and 836. Okay, so how was the company investing in its assets? In 2019, 76% of their assets were invested in current assets, only 23% in net fixed assets or net PPE. However, in 2020, the ratio of current assets to fixed assets, current assets went down 67%, and then fixed assets went up. So there was a great amount of increase in 2020 in terms of property, plant, and equipment. Okay, and then it went down in 2021, most probably because it could have been because of disposal of old equipment. Okay, and or since this is net fixed assets, it could be the of course accumulated depreciation. Okay, because there was an increase in depreciation. Okay, 116, 960, and then 120. All right. What else can we see? Can we see here? So, okay, in terms of equity, Okay, let's put a line here, top and bottom line. Current liabilities, long-term debt. Okay. Unfortunately, there's no. Why don't we insert here? Okay, let me just insert here total debt. Okay, total liabilities. Sorry about that. I forgot to include total liabilities. Oops. Okay. Total liabilities will simply be okay. So sorry about that, guys. We inserted the total liabilities row here so that we can see what's the difference between your leverage. Okay, in 2019, 55% of the financing was done by debt and 45% by equity. But in 2020, there seems to be a very big increase in terms of total debt, 80% and then only 19%. Okay, but it went down to 43% in 2021, even lower than the 29 figures, and then the equity was 56. And this was because if you look at the common stock, guys, common stock, there was a 2.6 times increase of your investment in common stock. If you see here in 2020, it was 16%, but here in 2021, the huge infusion of shareholders' equity from 460 it became 1.68 million. So that's why the ratio, equity ratio increased from just 19% to 56% in 2021. Okay. All right. So that shows us that the changes as far as the financing from either debt or equity, sorry, is concerned. So 19% in 2020 for equity, but it jumped to 56% in 2021. Okay, and then for the horizontal statement, we can see here that there was a decrease in cash from 2019 to 2020, negative 19%, and then an increase of 92%. Also, short-term investment increased by 258% or 2 times. Okay. Notable here, guys, are the changes in here. Fixed assets, okay, almost doubled, 1.72 times. More than doubled, almost, sorry, more than doubled, guys. 344 naging 939, 172 times percent increase, and then it went down by 11%. Okay, by 11% from 939 to 836. So our assets increased more between the periods 2020 and 2019 compared to 2020 and 2021. Okay, so here you can see here that our assets more than doubled from 2019 to 2020. And this is largely attributable to increases there were increases in terms of, okay, in net fixed assets and also in inventories. Okay, from 715 to 1287, here from 344 to 939. Okay. All right. So any questions here, guys? Any questions about our, it's important not just to look at these numbers in isolation. It's important to dig deeper. That's the role of finance. It's the role of management to see what lies beyond these figures. Of course, guys, we can only surmise, we can only guess because we don't have full information about this company. So we're only guessing based on the figures. We're only making some educated guesses about the performance of the company. But if we were inside the company, then we would have most probably more inside information about the operations. And of course, the management would be able to answer more in greater detail, okay, the story behind these increases or decreases as far as the income statement and the balance sheets are concerned. Okay, any questions, guys, so far? Any questions? Okay, good. Thank you. Thank you. All right. So I think we have time to compute for this. Okay. And then for this one, I hope this serves as an exercise for you. Construct the statement of retained earnings for 2021. And then there are some questions here that you need to answer, guys. No, it's not part of the assignment, but this will definitely be part of your long quiz. Tentatively, guys, the long quiz will be on by next week. Okay, that will be our tentative schedule, most probably Wednesday. Our long quiz, which will include modules 1 and 2. Okay, when you say long quiz, it will be for the whole period. Okay, so let's try to work on this, guys, so that by next meeting we'll be able to answer everything. Okay, for us to be able to complete this FS ratios and analysis. Where did I answer? I answered here. Okay. So was there any question? Okay, thank you. All right. So quickly, guys, let's review na rin natin to, no? NOWC, how do we compute for the NOWC? It's operating current assets, okay, minus operating current liabilities. So is equal to, let's sum this up, where are our operating current assets? So it will involve cash, comma, okay, not including short-term investments, accounts receivable, and inventories. Okay, so those will be our operating current assets minus the sum of our operating current liabilities, okay, which will be accounts payable, comma, accruals. So we don't add notes payable there. Okay, control enter or enter. Okay, so kindly compare, guys. Should have these figures for our net operating working capital. So these are our operating current assets minus operating current liabilities. Any questions, guys?
Sir, could you please repeat that po?
Okay, sige. Illustrate ko. So sabi natin, we said that our formula for net operating working capital is our operating current assets. Okay, so which of these guys are part of our operating current assets? So cash, short-term investments is not part of operating current assets, AR, and inventories. Okay, so those are the elements of our operating current assets. And then we have to subtract that the operating current liabilities, which include accounts payable and accruals, not notes payable. So let me show you the formula. So this is a sum of your cash, receivables, and your inventories minus your accounts payable and your accruals. Okay, and then we just copy the formula to the right. Okay, did that answer your question?
Yes, sir. Thank you po.
Okay, good. Thank you. So we can see here an increase in our net operating working capital. Okay, for our TOC guys, it's simply our net operating working capital plus your net fixed assets. Okay, that's our formula. So this will be equal to, we have now our NOWC plus our net fixed assets. Okay, take note guys, it's net. Okay, and what's given is net, so it's okay. If what was given was the at cost, then we'll have to find for the, we'll have to look for the net fixed assets. Okay, there. Okay, so let me flash the formula. It's simply your net operating working capital plus your net fixed assets. Okay, clear talk guys? Clear so far? Kindly chat please if clear so far yung natin, yung TOC natin. Okay, good. Thank you. All right. Okay, good. Then we go to net investments. Okay, our net investments will be equal to how much was the increase between years. So for 2021, it was the ending minus the beginning. Okay, and this one also. Okay. So how much did the investment, how much net investment in total operating capital was put in by management in 2021? Okay, so it's how much was the beginning, how much was the ending? Okay. So the company put in a lot of operating capital in 2020. Okay. All right, next. What's the formula for NOPAT, guys? Remember this? It's your EBIT times 1 minus our tax rate. Okay, so what's our EBIT, guys? Our EBIT from the income statement, EBIT, okay? EBIT, and then times one minus our tax rate. Okay, it's given at 40%. Given at 40%. So you can just copy this formula and copy it to the right. And we'll just extend the 40% here. Okay, any questions, guys? Net operating profit. So in 2020, the net operating profit really was down. Okay, even if there was an investment in a greater investment in TOC, it means that the company was not really able to perform well. In spite of the increased investment in TOC. Okay, any questions, guys? Okay, free cash flow, guys. How do we compute for the free cash flow? It's a formula for free cash flow, guys. Anyone? Formula for free cash flow?
Sir, NOPAT minus net investment in
Yes, correct.
operating.
Thank you. Thank you. That's correct. Okay, so that's correct. We have our NOPAT, and then we subtract so this is equal to our NOPAT minus how much was invested in TOC. Okay. All right. So that's our free cash flow. Okay, maybe we can, let's make this, guys, let's format this a bit. Let's make this there. Okay. So we, once again, guys, it's a negative free cash flow, but no, not necessarily, especially if the cause of the negative free cash flow is due to a high investment in operating capital. So we can see here that the investment in TOC for 2021 was almost $500,000 for 448. In 2020, it was 1.119 million. However, guys, we can see that the partly due to a low NOPAT for 2021. So we're quite ambivalent about this, about the high negative free cash flow for 2020. It's partly good in the sense that there was a great increase in TOC, but partly bad in the sense that the NOPAT was very low in 2020. It means that the company was not really able to generate enough operating profit. Okay, but we'll see. Let's see based on the ROIC. Okay, it's already time, guys. Okay, could I just have 1 minute, guys? Let's just compute for ROIC. So what's the formula for ROIC, guys? What's the formula for ROIC?
Sir, NOPAT
Yes, NOPAT
over
divided by,
total operating capital, total operating beginning capital.
correct. NOPAT divided by total operating capital beginning. So for 2021, they generated a NOPAT of 301 given beginning capital of 2257, right? Right, guys? So there was 13.3, okay? $13.4, and this one, there, 0.9 return on invested capital. Okay, 0.9 return on invested capital. What was the WACC? The WACC, guys, is 10%. 10%. So value was created in 2021. However, value was destroyed in 2020. That's a sad story here. Okay. So I leave you guys to compute for this. Kindly, guys, next meeting, we will just compare answers here. Okay. I will not anymore show you how to compute this, but make sure we'll just compare. Okay. And then if you have questions about it, then I'll address that. So next meeting, okay, let's just compare notes here. And then we're going to, please read through these questions. And then we go to this very important 5 types of ratio analysis. Okay, this is what we're going to finish hopefully next meeting, and then we're ready for our long quiz. Okay, as I said, may short quiz na tayo, no? Maybe in order to add more points, maybe we'll have another short quiz, but we'll have definitely our long quiz most probably next meeting. Okay, so guys, thank you so much. Yeah, okay. Those of you who did not have their attendance recorded a while ago, please stay. The rest of you, thank you so much. Please have a nice day, guys. Keep safe. And I'll post the recording, the video later.